So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 pips rocking and rolling here, 27th of September 2020. No trade calls, recommendations, are responsible for their own stuff. We're here for educational purpose only. So, what's happening going into this week, going into the final days of September, final day of the month, final day of the quarter? We're going to have these presidential debates. A lot of data here and there. We've got pretty much a bunch of Fed speakers. We've got Lagarde speaking. We've got the PMIs hitting, and the week ends up with the non-farm payroll. So again, there's a lot of stuff going on with the usual data risk and headline risk. But here, let's just focus as usual on price and the levels and how price is reacting at certain levels. Now, clearly, we have to keep in mind that the context, right? And the context is, as we said, coming into the whole seasonal period or seasonal 8-day period we just saw, sell Rosh Hashanah by Yom Kippur, which starts tomorrow, right? We saw some weakness coming in, which was not at all surprising, right? And basically what we said is this ties in also with the usual weakness we tend to see in September seasonally. We would expect to see that 5 to 10% correction coming in September. And we also understand that because it's a presidential year, I'm not going to go through all the charts and stats again, but because it's the last cycle, presidential cycle, the fourth year going to election, usually it would not be uncommon to see weakness also persist in October. But traditionally, even though October has been known for some fairly ugly dumps, seasonally October, November, December tend to be strong months for the market. And if anything, you would be coming into this month looking for longs, looking to build some kind of long positions if you were seasonally inclined to ride out till the end of the year. So again, everything is playing out pretty much the way we expected to play out also on the DXY, so we really can't complain with a lot of those trades. But the question is not necessarily what happened. The question is what is going to happen and how to try and take advantage of the action here. I think the most interesting thing on deck is that we still see a lot of people calling for a crash, calling for the end of the world. And remember, all things being equal, the recent pullbacks we've witnessed were fairly aggressive or enough to be called a correction, right? Here, if you look at FANG, basically highs to lows, almost 19%. Okay, what about Apple? Apple highs to lows, 25%. So again, as we went into last week, we said when you've got Apple that's corrected about 25%, NASDAQ or the indices about 10%, FANG about 19%. If you're a study of history, if you're a study of the market, if you're a study of probability of the odds, you can't come into that week expecting to see another 15, 20% down, right? At the very least, you would expect sideways to up. So right here, what is interesting is that basing process or that attempt to pop also took a little bit more than we would have expected. However, you see we closed the week at key levels. So on the ES, we came back into this previous high, bam, it held. Monday, Tuesday, Wednesday, Thursday, Friday. We thought that there was a significant chance that we put a decent swing low on Monday. It took a little bit longer for that to materialize, but still, at the end of the week, this key level held in a situation where the bears had foot to the throat, right? The bulls are really under pressure. And what was apparent all week was just that the bears were unable to attract new sellers at lows. Now you can look at this on any time frame, and we looked at this live a lot of times this week, saying we could only be playing for longs, right? The way the market was behaving. But even look at it on a 4-hour chart here, you can see every single time we prop below that level, these candles, see all these wicks. Remember, at a certain point, that wick was a full-bodied candle to the downside. So it was very, very ugly, but the just unable to attract new sellers at lows. And here, the market is clearly telling you also, if you look at the volume that was coming in, that, it's just optimal opportunity to go for that smash, but, unable to do so. And especially after a decent sized correction, it looked like, a wasted opportunities. But here it looks like you have to be open to the possibility that we've put in a significant low, right? Now, ES basing at that 100-day, if you look at the NASDAQ, again, also unable to attract any new selling, well ahead of that 1050. If you look at RTY, so the Russell, see it held another time that key pivotal level, 1450, came in, bam, bam, closed the week, back above the 200, back above the 100, and so on and so on. Very similar action across the board. Actually, if you look at some of the dailies, you can see, right? So here, just to have a bigger picture view. So 100 on the YM, on the ES, gold holding the 100, silver holding the 100, Aussie holding the 100, Kiwi holding the 100. So you see very cable holding the 100. Very similar action across the board, really. And that's what we also said going into that Thursday, Friday. It really looked like it was time to take profit on those open trades, or to start to reverse if you hadn't done so already. So here going into the week, anything can happen, but especially if you look at something like the ES, you should not be surprised if we've put in a significant low. And especially going on the NASDAQ, going back on that weekly chart too, look at how the weekly closed, right? Now, anything can happen. We can have a debacle in terms of data. We could have a debacle in terms of COVID. We could have a debacle in terms of the debate. But this is not a very bearish close, right? Of course, it's still below the 10-week, but it looks like this could be the stick save, and especially if we start to close back above that 10-day, this could easily ramp and pump hard. Now, don't forget that we're going through month-end flows, quarter-end flows, so always keep your eyes open for that last day of the quarter pump on Wednesday. But I think it is also, we have to keep in the back of mind that you will see the true face of the market, or the true direction, only after we get through these month-end, quarter-end flows, quarter-end rebalancing, because those could also be messing things up a little bit. So that's also something I was saying. Of course, all we can do is look at how price is reacting at specific levels, but you have to understand the underlying current, which is that we are seeing month-end flows, quarter-end flows, the rebalancing going on, and that could skew things a little bit. So again, we'll have a clearer picture once Wednesday is done into the end of the week. And again, we'll do more updates. But for now, that's the way we're looking at things. Now, also in terms of the Forex, right? Remember those short done on Aussie, Euro, first move, pretty much done into 115. What else did we have? Yen, counter trend trade, double bottom for the move back into the descending trend line. All those trades are pretty much done now. Euro is an interesting point, as we said. You really have to see. Oops, that's not what I want to do. Buying come in here quick. If not, we could see that 115 or lower very, very quickly. But it's a little bit hard to tell. From a bigger picture view, now on the DXY, we were posting, we discussed, a lot of people were getting a little bit excited once we broke above the 94. And what we said is, as far as we're concerned, 94 really doesn't mean anything. What we're focused on is the yearly range we'd set before the break lower. And what we said here, again, long USD, again, structurally we're bearish USD. We're looking for this ultimately 3, 6, 12 months down the line to be bearish. But we said this is the long, right? Long trigger expressed through a number of different ways. And we're looking for a move back into these areas. Primary target back into this zone. And then if we can make it back above, we did not discount the possibility of all the way back into that 96, and that's that euro breaking down all the way into the 100 DMA. So here, the big question, right, is dollar done here? And are we still seeing a lot of wheeling and dealing because month-end, quarter-end flows, and this is finished and we're going back down? Or have we got a little bit more room to run, and that's possibly all the way into 96? Now, of course, nobody has a crystal ball, so the easiest way to look at that, in my opinion, is simply to look at the daily closes. If we start to get daily closes above this 94.60, then I would assume there's more squeeze in play, and that 100 DMA and 96 is going to be in play. If we get closes below, then maybe the weakness is coming right back in, okay? Now, in terms of the bigger picture, if you look at the monthly, similar, a lot of dollar bills here will be calling for this to be done and over. You know, we're holding this channel, we're holding the 100, and they're going to be looking at this all the way back done. Let the bull run resume. Now, we still feel that it's premature to look at that. We don't want to look at these big moves, whether it's to the upside or the downside now, as we're going into this very tricky period with presidential debates, election, who knows how it's going to go. We prefer to still focus on the previous range we had, and below stays extremely heavy. Back inside this range, it could stay bid, but we still would go back to consider it velocity of move inside this choppy range. And unless we have more clarity on the election, who won, how they won, transition of power, it's likely going to continue to stay inside that area, right? And that's very similar, of course, if you look at the euro, 55, 60% of the dollar index, very similar action. The dollar bears are going to be saying, that's it, end of the world, euro's dead, and it's going all the way back down here. Now, that's not our base case scenario. Our base case scenario is whatever weakness we see here will ultimately get bought for the move back there. But again, I'm not going to go into the whole outlook on the dollar again or on the euro. But that's pretty much where we are this week. So I think it's just a question of being patient, understanding that really the focus is on equities, on indices. That's the best bang for your buck. Sooner or later, we still think that FX vol is going to pick up and we'll get a lot of stuff to do there. But right now, the quicker bang for your buck, or the better bang for your buck, is equities, especially as we go through the end of the month, end of the quarter, because that's what's going to be driving everything. So that's what we're going to continue to focus on. That's what we're going to continue to watch. And again, a lot of interesting things. Let's see what we get, and I'll do an update as soon as we get a little bit more clarity. All the best, guys. Talk to you guys soon. Take care. Bye-bye.